Let's look at some of the top business stories making news. The share price of private hospital group Mediclinic rose to its best level in almost a year today after the group said its growth in patients' numbers helped boosted interim revenue 9% in its 6 month to end September. Mediclinic Southern Africa saw an increase of inpatient beds days sold during the period in line with expectations. For more on this and other stories making news, I'm joined in studio by Jimmy Moyaha, market analyst at XA Trader. Jimmy, it's good to see you.
Thanks to see you, Tabo.
So then the share price rising there to its best level. Patients, inpatients in beds showing a rise of 2.7%, outpatient volumes 5.5% up, as well as inpatient volumes up by 1%. Impressive first half?
Not a bad first half for them. I mean, if you look at the stock overall, it's up about 16% for the 2019 as a whole. It's a very good 6 month results for them, and they hold about, what, 53 hospitals in the country. And this is very positive off the back of the inquiry that just happened recently around whether or not the private sector is governed by Mediclinic and the two other big players in the market. So this is very, very positive for them to show these results so early on.
EBITDA, what is it showing, market, in terms of their operating profits?
That's slightly down, oddly enough. That's slightly down about 0.3%. So that would look at earnings as reflection of revenue, and that's down marginally. But I mean, from their side, they're not too concerned about that. The revenue numbers were up, and we've still got another 6 months for them to see how they can bolster that as well.
Well, they've recently adopted a new accounting standard, the IFRS 16. What does it really mean?
So essentially, the change in the standard then means that they will now account for some of their lease assets as part of the Mediclinic group and that sort of thing. There were a couple of things that weren't included under the old accounting system as part of what they need to report from a balance sheet perspective. So now, under the new IFRS laws, they will then need to account for certain assets and add that to their balance sheet in terms of reporting.
Johnson & Johnson, and I think it's United Med as well in the US, they are accounting for a real positive move on the stock market yesterday. And of course, I'm seeing here as well, they are reporting that their price rose 2%, or rather their profits rose 2%, making a huge contribution to Wall Street. They are facing 13,000 lawsuits at this particular point. They did not report on these litigation expenses, especially for the third quarter. If you look at it, it's still sitting at $832 million US. But this, of course, is looking good for them.
Well, I mean, it depends on what perspective you're looking at it from. So Johnson & Johnson has said that they didn't report any litigation costs in the third quarter because those costs were accounted for at the end of the second quarter. But if you look at the lawsuits, apart from the 13,000 lawsuits they've been facing, earlier this month and in August as well, they've been in other suits that don't relate to what they're going through now. The 13,000 suits relate to one of their antipsychotic drugs that they've been sort of having on the market, and they recently just had a verdict against them in regards to that specific drug. Cost them about, well, the judgment handed down was about $8 billion in favor of the claimants, and so they're appealing that. But on the other side, they're also facing other charges in regards to things like the opioid scandal that's happening in the US. That's big news at the moment. The major pharmaceuticals out of the US were expecting one of the biggest settlements from the opioid market. We're expecting about $18 billion to be settled there. Of that, I mean, Johnson & Johnson is a contributor to that as well. So it's been ranging over a couple of years.
They also won a couple. I mean, they recently got one for that $100 million lawsuit on their talc, and it seems the court said, look, they were not responsible there. Their powder is safe and good for use.
Yeah, so they're in a lot of legal battles at the moment, and I mean, like you said, they're winning some, they're losing some. Another one that they lost in August was about $572 million as well. So it's very, very interesting times for Johnson & Johnson in terms of the legal side of things. So it should be interesting to see how they can then continue to say that they're going to hit the top line revenue and they're going to hit higher than expected.
How is that litigation so far affecting, the share price? Is it limiting it? Is it boosting it?
Well, like you said, I mean, they've stopped accounting for it. So they stopped accounting for it at the end of the second quarter. The third quarter, they reported positive sales numbers. The share price has gone up. It'll be interesting to see in the fourth quarter, at the end of the fourth quarter, if they then factor in any additional litigation suits, if there are any additional settlement costs that are going to then affect them from that perspective. And that'll be interesting to see come final reporting numbers at the end of their year.
They believe they've got a strong case, though.
They firmly believe that on their side, they followed all procedure. They're arguing from a legal standpoint, from a position of strength, to say that in their mind, from a company's perspective, they followed all the procedures, they've done things correctly. But it'll be interesting to see. I mean, if the judgment goes in their favor, they could be looking at reduced costs. But if the judgments don't go in their favor, then an increase in revenue might not be enough for them at the end of the year, you know.
Well, where is this growth coming from? Because, I mean, of course, as you mentioned, is that antipsychotic medication that they're dealing with. They're also dealing with a couple of issues which have got to do with their devices. So what is it that is boosting their growth?
Funny enough, it's not coming from their medical devices, and it's not coming from their consumer units that they sell to the general public. It's coming, a large portion of it is coming from their drugs in the alternative medical space, where they're seeking to treat illnesses and that sort of thing. I mean, their leukemia drug was up about 30% in the year. So you see that the shift is not their revenues coming from the traditional sources, the mobile devices that they used to sell and all of that, but instead it's coming from ailments or medical treatments that they're putting in place.
Well, they're the first drug maker to report. Does that indicate a positive sign going forward?
We could look to see that. We could look to see that. But again, with the opioid scandal that's looming over the US, and you've got 2 or 3 other major drug players there expected to also then settle in as part of that $18 billion settlement, that could really pull out a bit of a surprise for the pharmaceutical sector as a whole. Especially now in the middle of US earnings season, it should be interesting to see how all of the pharmaceuticals then report from that.
Yeah, no, indeed. And of course, we want to get into the other stories as well. There's a lot that's happening right here in South Africa with Helios. We'll also have a look at what's coming out from the post office, some rather interesting numbers as well that they are reporting. We know they've just taken over SASSA, which of course comes with some expenses as well, and how that affected the bottom line. You're still watching Business Unusual right here on Newsroom Africa, channel 405. After the break, we continue with the top business stories making news today. Stay with us. And welcome back. You're still watching Business Unusual right here on Newsroom Africa, channel 405, and we continue with the top business stories making headlines today. I'm Thabo Mdluli in for Ayabonga Tau, and I'm in conversation with Jimmy Moyaha, market analyst at Exit Trader. Now, the Portfolio Committee on Communications yesterday was briefed by the Post Office, giving its annual report for the year ended March 2019. The report showed that the mail revenue declined 8% to 2.8 billion rands as a result of declining mail volumes. Now, according to the Post Office, mail revenue is still the thing, right? So people are still sending letters. It's amazing in this year of iPads and everything else and emails that there are still people who are sending mail, and that's a bulk of how they're making money. It has decreased 8%, but it's still a major part of their business.
Yeah, no, I mean, I'm just as shocked as you are that in this day and age, in the technological world we live in, where some people have never even heard of what a postage stamp is, you still have people that are sending letters out. But yeah, as you say, the post office, that's still a large part of their revenue. That's where they're getting a lot of their money from and that sort of thing. But if you look at where their other sources of revenue lie as well, you'll see that they get some of their revenue from motor vehicle license renewals as well. That makes up about 5% of their revenue. And then, as you mentioned, the SASSA distribution center that they now all the responsibilities they have with regards to SASSA now.
Let's talk about that. Motor vehicle licenses up 5%. I don't know whether that has got anything to do with the fact that they now allow you to pay with your debit card or your credit card to renew your driver's license, because previously that was not allowed. Yeah,
no, I mean, they had to come up with new ways for them to collect the money. At the end of the day, it's not everybody that walks into a post office with cash, or you have to go to the ATM specifically to withdraw money just to go renew your license. So this was definitely a good thing for them to do. And I mean, it's one of the most commonly used places. If you have to think about how many post offices are you in your vicinity versus you going to a traffic department to go renew a license. Kind of makes more sense to go do it through the post office.
Mark Barnes has always thought, look, the way of the future is, of course, to make the post office turn into some kind of a bank, get a card going, turn it into a financial services of some sort. Eventually, we got the post office to now distribute the grants, which has put about 714 million into their revenue. This, of course, comes with costs, and the costs have increased by 18% to about 7.7 billion. What are they paying for?
Well, I mean, you're paying for about 80 million rands of additional staff. The post office becoming a bank itself, as you said, they've got cards that they now issue. The post bank cards themselves are now another 240 million. So the SASSA project as a whole, while it does benefit the post office from a revenue side, we can't discount the fact that it accounts for 10% of the post office's entire expenses. From an operations perspective. So it is something that is going to increase your revenue, but it is costly to do that. So you're incurring those costs to increase that revenue, and is it really justifying the amount of revenue that you're getting for the amount of additional costs you're taking on?
Yeah, that is the question, isn't it? So the Auditor General saying there's a little bit of an issue with the delay submissions of other receivables, but as well as deposits relating to SASSA liabilities. What do you read into that?
So the Auditor General came out and gave the Post Office a qualified report, which, as you said, is just due to the missing information that was there, so they couldn't give them an unqualified report from that. And if you look at what the Post Office is then going through as well now is, outside of that, outside of the SASSA situation, yes, they're increasing revenue, but as I mentioned, because of the increase in costs, you're now sitting with a situation where your cash flow is being affected. From a cash flows perspective, the government has given them 3 billion rand. They've set aside an additional 1.5 billion rand, but so in the aims to clear debt and that sort of thing and optimize the operations from that perspective. But what you've done there is you've cleared the debt and you now need to optimize revenue, but your revenue is declining from the sale of or from the mailing of the letters or your mail revenue, as that's still your primary source.
There's money though that was ring-fenced after that bailout from government. I think it was close to 900 million. What is happening to that amount of money?
Yeah, so the 900 million is being ring-fenced. That's set aside for capital upgrades and that sort of thing. I believe it's part of the 1.5 that the government initially set aside when they gave them the $3 billion bailout, 3 billion rand bailout as well. So the money set aside for improvements into their infrastructure and their capital outlay so that they can improve their processes. But I mean, at the end of the day, the SASSA process, the mailing process, a lot of that is still largely a manual process. You'll see that the post office hasn't digitized too much in this age, and that should be interesting to see if they can maintain that while operating on negative cash flows at the moment, or if the post office must not then look into possibly shifting into a more digital age, which is where we are as a country and as a continent.
Is there anything that's being mentioned in terms of work that is being done to turn around the situation? Because I know right now they're reporting liquidity concerns. Had a chat with the interim CEO, I think last week at some point in time. They're introducing some interesting things around the e-mall, which is what the minister has also announced. Any other interesting initiatives that they're coming up with to turn the whole thing around?
Well, aside from the e-mall, I mean, I haven't seen anything groundbreaking from their side as well. I mean, they've announced that they've got plans. Like you said, they've announced that they plan on coming out with a couple of things to improve all of these processes. But I mean, if you look at how big a deal the SASSA thing is for them, going back to that again, is it's going to take up a lot of their time and a lot of their resources to get that up and running properly as it should be. But also from that perspective, if they're not looking to alternative revenue sources, what are we going to see from them in terms of how they're going to cover up this negative cash flow?
All right, let's look at some news also coming out of the PIC. It looks like the PIC are on this mission to try and recover some of the stolen money, and they've got Sekunjalo firmly on their side right now.
Well, the PIC, I mean, for me, I'm a bit wary of what they're doing at the moment, not in terms of the legal aspects of things, but I mean, what they're looking at now is, as you said, following up on legal action in terms of Sekunjalo and seeing what they're going to get from that situation. But if you just backtrack to how the PIC got themselves in the situation in the first place, in 2013, they gave Sekunjalo the 1.2 billion to acquire independent media, and the consortium never serviced that debt. So the PIC let them not service the debt over all of these years, but then what is even more surprising is that in 2017, when a company owned by the same shareholders, AO Technologies, came to want to acquire British Telecoms, they then funded them an additional 4.4 billion rand. So there's a company that hasn't been, granted they're two different companies, two different entities, but the shareholders and the owners of these companies are largely very much the same.
Explain that structure for me, because Dr. Ibo Server coming out and saying, yeah, but you're going after the wrong company. This, the company that you should be going after is Sekunjalo Independent Media, which was created solely to be able to get that media business.
Yeah, so essentially Sekunjalo, the consortium, the investment company, is owned by Africa Equity and Empowerment Investments, which is Dr. Survey's company. So from that, what they then did was they set up a special purpose vehicle, which was the SIM, as you mentioned, and that's the purpose of that company, was then to acquire independent media. So the funding then went into that organization. They acquired independent media from that, and now Sekunjalo has a vested stake in Sekunjalo Independent Media, as well as what the PIC has in that. So these two companies now have essentially the separate vehicle there. They have their vested interests in there. And so Sekunjalo is saying that this is the company you need to go after for that, not us as the main company. But again, coming back to the PIC, you're in a relationship with Sekunjalo, you're in a relationship with African Equity, and these are the same guys that then have a stake in AO Technologies, which then went after the British Telecoms acquisition. So you're dealing with the same batch of investors, you're dealing with the same batch of shareholders, and after you gave them the 1.3 billion, which is now estimated at about 1.5 billion that they owe, they haven't been servicing that over time from 2013 up to now, or even if they haven't been servicing it fully up to now. And then in 2017, you then give the same group of shareholders an additional 4.4 billion to acquire a different company when you know that this hasn't been serviced on this side. So I don't know if the PIC is really aware of how they're dealing with their investments from their perspective. I mean,
how easy a decision is it going to be for the PIC to liquidate Sekunjalo Technologies, especially because, of course, their other mandate is for them to fund transactions that have a transformation of ownership of the economy kind of put into it. And right now, it would be seen as if they are going for this particular deal and it's anti-transformation.
Well, I mean, that was the premise of the 2017 deal with British Telecoms, is that it was part of a transformation deal and that sort of thing from that perspective. So if you look at the PIC at the moment, I think from the structure that Sekunjalo has on their side and the way they've set up their companies and that sort of thing, if you're going to go after a legal entity, you can only go after certain legal entities for certain things. So from a legal perspective, it might take them a bit longer to get their funds out of where they need to, depending on how the structure was built. So, I mean, my understanding of the structure, as I've explained it to you, might not be the full understanding of it. So there might be other pieces in play, there might be options in play, there might be other things that were put in place to prevent or to limit the liability or to reduce the risk for the transaction. So from a legal standpoint, they'll have to explore whether or not they can go after Sekunjalo, whether or not they've got anything against African Equity and Empowerment Investments, or whether or not it rests with Sekunjalo Independent Media as an entity on its own.
Because the asset itself, still profitable in any way? Can they get anything out of it? Mind you, there are people who are still employed there. We don't want to see a situation of what happened to VBS. We know what they did there, and people lost jobs.
Yeah, well, VBS cost the PIC about 350 million, so that's, yeah, we definitely don't want to see that. But from an SIM perspective, on their side, if you look at the share price, the share price has gone from 43 Rand at the time of getting into this engagement to now 5 Rand a share. It's lost about 80% of its value. So I think that answers your question as to whether or not it's still a viable opportunity for the PIC to be invested in. And I think that's probably what sparked the PIC's need to go then reclaim the money, is that they've now seen that this is where they're sitting in light of where they were sitting at the time of the investment.
Well, they've already sent a letter of demand. Sekunjalo did not respond to that letter of demand. What other option do they have at this point?
I'm sure they've got another number of legal options they can pursue. They are looking at liquidation of Sekunjalo as well. But again, the legal precedent for that will have to be determined as to whether or not they have just cause to go after them. I mean, the 1.3 3 billion that was given was largely as part of debt financing. So from that perspective, they might have a legal claim there to say that that's what they would then want. But also at the same time, the PIC has 25% stakeholding in this venture. So if they would then want to sell their 25% stake, that could be another option they could look at. But then who do they sell the 25% to?
Jimmy, and that's it. We're out of time. Much appreciated. Thank you so much for coming through. That was Jimmy Moyaha, the market analyst at Axie Trader, giving us a wrap of our